And most importantly, when can we expect the rebound? High interest rates ने बहुत ही large scale पे बुरा असर डाला है. Warning signs to watch out. क्या market और भी नीचे गिरेगा? क्या ये dip 20% टच करेगी? All this have led to a very pessimistic investor sentiment. इंडियन स्टॉक मार्केट एक टाइम पे अनस्टॉपेबल लग रही थी, राइट? इट वाज मेकिंग न्यू रिकॉर्ड्स, ट्रेंड्स एंड द मार्केट वाज वेरी बुलिश. But what started happening from the last 5-6 months is really very troubling, creating a sense of fear and panic as market is not finding a key level to support it. Nifty 50 has corrected itself up to 15.87% from its all-time high in late September 2024, with it losing momentum from last 5 months, which is longest since 2000. क्या ये dip 20% टच करेगी? Will it really enter a bear phase? तो चलिए इस वीडियो में अनफिल्टर करते हैं कि क्यों मार्केट इतना डिक्लाइन कर रहा है. वार्निंग साइंस टू वॉच आउट. क्या मार्केट और भी नीचे गिरेगा? And most importantly, when can we expect the rebound? A lot of financial firms and specialists are warning for a major stock market crash. This everybody knows, right? But there are even experts and rating agencies who are optimistic about Indian stock market resilience. For example, Morgan Stanley, a global leader in financial services, has given a report according to which market is set for a 360 degrees transition in the coming days because of increased government spending, easing liquidity in the market by Reserve Bank of India, and retail investors participation. Now let's first understand कि क्या reasons की वजह से market इतना fall कर रहा है. Number one is overvaluation. मार्केट इतना ओवरवैल्यूड हो गया था कि बस किसी ट्रिगर की जरूरत थी और ये बबल बर्स्ट करना ही था. लाइक इट हैपेंड इन 2000 विद .com बबल. सेकंड, geopolitical tensions. As soon as Donald Trump became president in US and he announced his import tariffs, panic started और इंडेक्स नीचे गिरना शुरू हो गया क्योंकि people feared कि it will impact the export market of Indian commodities. अब ये कितना सच है और ये कितना इम्पैक्ट करेगा वो हमें कुछ समय में क्लियर हो जाएगा. थर्ड रीजन इज इकोनॉमिक इंडिकेटर्स. जितना भारत को एक विकसित और एक समृद्ध देश बनने के लिए ग्रोथ चाहिए और जितना प्रोजेक्ट किया जा रहा है बाय द गवर्नमेंट, उतना इंडिया जीडीपी अचीव नहीं कर पा रही. और अगर ऐसा ही रहा तो और भी लेऑफ्स आपको काफी कंपनीज में देखने को मिलती रही और मार्केट ऐसे ही डिटराइट करती रही. फोर्थ इज टेक्नोलॉजिकल लिमिटेशंस. गवर्नमेंट कोशिश तो बहुत कर रही है टू बूस्ट आर्टिफिशियल इंटेलिजेंस एंड रोबोटिक्स, बट इट इज नॉट सफिशिएंट व्हेन वी कंपेयर इट टू यूएस एंड चाइना. Like Nvidia in US saw stock price growth of 178% in 2024 and disruption caused by DeepSeek made by China. India is lacking in these sectors. Fifth reason is large outflows by foreign institutional investors. With close to 3 lakh crore sell-off by FIIs on a net basis since October 2024 have led to market tail spinning. Result, the market capitalization of India fell below $4 trillion mark, first time in over 14 months. We will discuss this point in more detail in just a minute. Sixth reason is inflation. महंगाई की वजह से कंजम्पशन में लगातार गिरावट देखने को मिलती रही, which led to sluggish growth in the economy. Seventh point is interest rates. High interest rates ने बहुत ही large scale पे बुरा असर डाला है कंपनीज के revenues पे. Just my opinion that interest rate should be further reduced after 0.25 basis points reduction by RBI recently, as now inflation is in the target range and country need a major boost right now. Although RBI has its own challenges as rupee is also depreciating a lot in these times. All this have led to a very pessimistic investor sentiments and the large volatility in the market. The biggest factor that shook the Indian equity market was the FIIs pulling out trillions of rupees, and there are many factors responsible for the same, like we discussed above. But two other factors which we generally neglect are the rupee falling against dollar and the impact of LTCG, large term capital gains. Let's discuss one by one. Suppose an FII invested in Indian market with $1 lakh on January 1, 2024. At that time, $1 was equal to 83 rupees approximately. So that means the investment became 83 lakhs. Now say the investor wanted to exit the market on February 2025 with a return of 6%, which is roughly the return of Nifty 50 for this period. So he will redeem the shares for 87,98,000 with a return of 4,98,000. Now you know that the long-term capital gains has been increased from 10% to 12.5%, causing more losses to FIIs. So the net gain in this example for FIIs will be 4,35,750 instead of 4,48,200. Loss of rupees 12,450. Remember, I'm just taking the initial investment as 1 lakh US dollar. But in actual, FIIs will incur huge losses because they invest in trillions. So in this example, after tax deduction, they will get 87,35,750 rupees. Now during the period of February 2025, when they have redeemed their shares, 1 US dollar equaled 86.95. It has increased itself from earlier 83 rupees. That means it has depreciated. So now the FIIs will get 1,468.66 US dollars, leaving just $468.66 in the hands of foreign investors, meaning gain of just 0.46% compared to rise of 6% in the benchmark Nifty 50 during the investment period. So it shows how long-term capital gains and rupee depreciation have triggered the foreign investors' heavy sell-off. If you look at broader market indices in the table, Nifty 50 has fallen by 14.20% and Sensex by 13.12% in the past 5 months. The worst hit has been taken by the mid and small cap stocks. For the past 5 months as on 28th Feb 2025, Mid Cap 100 dropping by 20.46%, Nifty Small Cap 100 sliding by 23.55%. If you see their year-to-date figures, they are also roughly in the same zone, not much improvement. However, the thing to watch out for is that if you compare Indian market with global peers, then they have shown resilience on both time frames. For example, during past 5 months, Hang Seng Index of Hong Kong grew by 7.75% in this period. DAX Index of Germany gained up to 16.18%. Dow Jones Index of United States rose 3.73%. Similarly, the same foreign indices have shown upward trend on year-to-date basis. So it indicates the outward flow of foreign investors from India to United States, China and Eurozone. Now let's jump into the most important question. When it is likely that the market will recover? According to a poll done by Reuters, an international news agency of equity analysis, Nifty 50 is forecasted to rise more than 6% on average to 24,000 by mid-2025 and to 25,689 by end 2025. BSE Sensex is also expected to rise in the range of 78500 to 80850 by end 2025, but will be well below its all-time high of 85798.25, which it reached in September. इन एनालिस्ट का मानना है कि हम लास्ट ईयर के हाइस को तो अभी टच नहीं कर पाएंगे, but market will start to recover gradually, driven by buy at the dip trades and selling exhaustion. A major obstruction is food inflation and unemployment, which have squeezed household spending and put a dent on corporate earnings growth. But because of the tax exemptions on annual income up to 1.2 million rupees announced by Finance Minister Nirmala Sitharaman in the budget and Reserve Bank of India's willingness to ease the liquidity, initially shown by the last 0.25 BPS reduction, after long time will affect the consumption of households, ultimately initiating the recovery in the market soon, as predicted by various experts also. Another major blockage was the tariffs announced by US government. I have made a shorts on this. You can check it on my channel and you will get the idea of the impact which this US import tariffs is gonna cause to us. However, some experts believe that Trump is using the threats of tariffs as merely a tool for negotiation. That will ultimately be good for the global economy and trade. One more good news is that the Q3 GDP has increased to 6.2% from 5.6% in the previous quarter, which is a great jump, and the same is expected in the fourth quarter also. This increase in GDP data this year, more disposable income with the people after tax rebate, increasing government expenditure and other factors we discussed will most likely increase the revenues of the companies in the coming days and prevent the market from entering into the bear phase and start the rebound early. At last, I would also like to say that market history has always shown that every Indian stock market correction has been followed by a recovery phase. So instead of panicking, let us ride this wave of correction through diversification and strategic approach. Finally, if you found this video interesting and helpful, then do like and share it. And what's your take on the stock market recovery? Kindly comment below. And if you want that I should keep providing these unfiltered insights and analysis on each and every financial topic and issues based upon my experience and expertise, then don't forget to subscribe the channel so that you don't miss any. I'm Sahil Sani with 7 years of experience at Canara Bank, 2 years in the insurance industry. I'm also NISM certified and also JIAB certified from Indian Institute of Banking and Finance. I will see you in the next video to unfilter another financial issue. Until then, Namaskar.